Hello and welcome to today's conclave on emerging risks and solutions for global corporations, which is organized by Indo-American Chamber of Commerce, the West India Council. I'm Nisha Poddar from CNBC TV 18, and I have with me an eminent panel of guests who have their skin in the game when it comes to management of risks, as well as providing solutions and coverages. So let me welcome all the panelists here on the stage. Now, my first question definitely will be on the evolving landscape on the regulatory aspects and the changing dynamics in the business prospects. We are all getting into a global economic cycle. India is not immune to the global regulatory changes as well as the new mechanisms which are developing, and internet has a big role to play in that. How are we really coping with it? And what is the kind of solutions as well as the coverage that we have in India, and are we future ready? So that's the big question, ladies and gentlemen. Let me first address the question to a big corporate here on the panel. Saurav comes from Reliance Industries, a large conglomerate. Now, talking about risk management, how big and critical a role has this particular area and the vertical of business has really taken, Saurav, and where is it headed?
I think it's a very large question that needs to be addressed, especially after, not after or before. It's basically we get obviously governed by the Companies Act and the obligations under the Act. But I mean, keeping the act aside, I think for any large organization or any large corporate, I think risk management, developing the risk management philosophy, creating the right lines of defenses is very, very important, because for any business now, since we work across boundaries, you need to be aware of the local regulations, not only in India, but across India. So it's important to identify, quantify, and address the risk issues. Now, and when we say addressing the risk issues, it's not only just buying insurances, and how do you transfer the risk without insurance also. So it's completely, developing your own risk management philosophy, writing a, complete book on how much risk you want to retain, how much you need to transfer, and, getting right up to the senior most management within the organizations, because Company Act do ask you to, put a right framework, monitor it, and then also closely implement and ensure that, because at the end of the day, you have to protect the shareholders' value. I mean, that's what I like to, start up with.
All right, so protecting the shareholders' value. Now, let me come to Ketan Dalal then. Ketan, you've seen the regulatory aspects for many years. Of course, Companies Act 2013 has brought about a huge change, and also the corporate governance standards that now we are getting acclimatized to in India as well. So when we talk about the various regulatory changes and how the landscape has really evolved, what are your views on how fast changing is this particular area?
Nisha, as Saurabh mentioned in a different context, this is also a very broad question, but let me just step back and look at what has happened in India in the last, let's say, 10 or 12 years. So I divide these changes into 4 baskets. One is regulations themselves. So you spoke about Companies Act, SEBI. So that's one set of regulations. FDI, you saw FDI and e-commerce regulations suddenly changing. The second basket is tax. So endless number of changes in income tax. And then, of course, you have had the big daddy of them all, GST. The third is sector regulations. So we are sitting in a place where there are lots of insurance people. So say IRDA regulations. You have a completely new sector regulation like, say, RERA. And the fourth is Indian accounting, the Ind AS, the accounting standards. And from experience, I can tell you that corporates have been totally snowed under. It's becoming impossible to deal with so many regulations. I was just talking to all of you before this panel, that SEBI regulations, every third day something is changing. So we're listing obligations and disclosure requirements. So I think to cut this short and get to the point, I think the huge number of regulations, and it's becoming extremely difficult, and that brings with it its own set of risks, because you may not understand, or even if you understand, you don't even know how to comply, or you may not even have the people to comply with it.
Right. So many changes, and Tanaya will throw more light on that from the welfare of the employee perspective and how new things have emerged, like sexual harassment, which was not there when I joined an office 15 years back. So how have these things really evolved, and how are corporates being able to adapt to these changes?
First of all, POSH, as we call it, prevention of sexual harassment, is something which really happened as per the Vishaka guidelines. For those of you who are probably new to the story, it was about an NGO worker called Bhamri Devi versus the state of Rajasthan, and the Vishaka guidelines actually came in. And what happened is some corporates started their movement, but unfortunately what happened is the government of India didn't really react. And then in the background was the Nirbhaya case which happened, and that's when everything, really went, everything started churning, and there were lots of regulations. But having said that, there is technology also behind POSH, and a lot of companies are using data analytics and artificial intelligence to come about with a predictive index or predictive analysis of how every facility, how every the layers, where is this going to be? So there is that kind of predictability is also being built into the system through predictive analysis, data analytics, and artificial intelligence.
All right. So these are systems in place to prevent these risks from coming up. We'll talk more about the systems and to sense it, to act on it, to react on it. But first to the prevention. And Sanjay comes in on that one from ICICI Lombard. So Sanjay, it's a big business opportunity as well, do you think, for the insurance companies? And we've been talking about insurance penetration in the country for a decade and a half. Is this for real now with the kind of risks that are emerging?
Absolutely. So our business is, risk. So it's always a business opportunity. So the issue, I think, a lot of highlight, in terms of the complexity of risks which are coming in, and, how do corporates tackle that, even at the employee level and, stuff like that. But, I always maintain the business of business is to take risk. Correct. And if the business of business to take risk, where do we stand? So then we, corporates alone can't really tackle it, because sometimes they are isolated at times. So you need, people, an ecosystem of people who, deal with risk. Advisors like brokers, who understand risk and keep giving advice, unbiased advice. Then you need people who need to transfer the risk. Some risk you retain, some risk you transfer. And when you transfer the risk, the mechanism is global. That's what I'm proud about the insurance industry is it's a global transfer of risk.
Yes.
The word global is also important there. But the point is that you need to transfer risk to be able to tackle situations which are extreme in nature. Extreme could be catastrophes. It could be something which in terms of emerging risks like cyber. But you don't know. It's unknown. It's a VUCA world, so you need to really prepare for it. Having said all of that, I think the whole, debate should be about identifying risks, being able to work, as you said, being able to prevent and mitigate some of it, and the rest which you can't prevent, which is something which is like an earthquake or something. Then you need to transfer it to be able to, make sure that the company or the person survives, risk. For companies, it's always balance sheet risk. They can't go down under. For individuals, anything is a catastrophe, whether it's a harassment issue or a big sickness issue is a thing. And you need to have mechanisms to be able to, take care not only on the preventive side, but even when something happens, then you should be on a long-term basis be able to take care of it. Because we live long and we face these issues over a long period. It's not about here and now.
So the larger question here, definitely, that we are discussing, first of all, is that the mindset of having a coverage for protection, is that there in India? Is it still prevalent? Is it enough or not as yet? And that's something that we have been debating for a decade and a half, is what how I understand this. But Tanaya, coming from the HR perspective, is that now well understood in terms of the costs and the resources which need to be deployed? And are the corporates more agile towards that and more open towards that?
Again, if I go to the POSH guidelines, companies are ensuring that, see, because it mandates that, you have, it's a quasi-judicial framework where you have 4 people who are supposed to be there, 50% being women, and 1 obviously being an NGO or a lawyer, and that's mandated. But it is becoming extremely expensive at this point in time for companies, because if you look at the state of Bengaluru, where there was a particular case where the employee filed against the judgment that was taken by the POSH committee, and the company was liable to pay. Right. So this is something which is, it's a constant change. And the good news is that my counterparts have just told me that, there is an insurance cover for this, and this is the directors and officers liability insurance and the employment practice liability insurance.
Yes. So there are new products that are also evolving. But let me throw this question to Ketan. When it comes to, say, mergers and acquisitions, the key man insurance and the key man protection, how important is that? Has the due diligence stage also reached there? And I have a very live example in front of us right now in the large Walmart Flipkart deal, where there was a Me Too kind of an issue, because of which there is a huge uncertainty and therefore a loss. So have we now acclimatized ourselves to the due diligence of even the personnel and therefore the protection?
In the context of M&A transactions, usually it has not filtered down to that level yet. Usually the due diligence, and even that is sometimes lacking because of the pressures of time, is in 3 broad baskets. One is the commercial DD. Does this deal make sense in the first place? Will the cultures match? Are the 2 companies synergistic, etc., etc. The second is the legal due diligence, land titles, assets existence, and so on and so forth. Of course, valuation will always be there, but I'm not counting that as a part of due diligence. And the third, which most people think is the only due diligence, is really the financial due diligence, unknown liabilities, this, etc. Now, if you see all these 3, they normally till now have not filtered down to those softer issues that much. But as you said, with the kind of example that you gave, I think that issue is also coming to the fore, because the risk here is a management disruption and significant reputational risk, which can take months and months and months to, sort of unwind, if you see what I mean.